So, Vortex DNA, we build predictive models for companies. We have a unique approach. We have something to say about human attention, which I'm not going to dwell on here at this conference because we're actually introducing predictive analytics, but it does actually have something to say about when you have very poor data, if anyone wants to talk to me about a Spanish situation or anything else, we also have some other technologies around human attention, which we can now understood can be mathematically modelled, which we think can help in those circumstances. We, as I mentioned, we've been working in a wide range of sectors. We did our initial proof of concept against Google Search, where we were able to improve their click rates by 3%. By Google's own reckoning, that should be worth about $300 million a year to them. So I think all of you will probably know RML is one of your key partners in this fantastically networked organisation you have here. They came to us at the end of last year. They both were purchase and contingent debt, but they were looking for another key word that we heard in the previous presentation, increased segmentation, which is all about what predictive analytics does. How to divide up your database so you know who to target your resources towards in order to get that incremental gain that you're looking for. So we went about and we built a predictive model for them. We were, it wasn't quite as bad as Spain, but we only had 4 attributes, 4 variables to work with. So 4 things that they knew about their New Zealand-based customers, although they do work for Australia as well. This was a New Zealand-based model we built for them. And with those 4 attributes, which are some pretty basic things like the sector that the debt came from, the geographic region, didn't go down to postcode, it was just geographic region, a couple of other things like that. We were able to build a predictive model based on traditional techniques and our own proprietary processes as well that enabled them to get a 6-fold increase, not 60%, 6-fold increase above baseline of their ability to rank order those people most likely to repay. So we were very pleased with that model, and that's been replicated elsewhere. We're also working with actually building a similar model for the largest credit bureau in Australia and New Zealand in partnership with them at the moment, which is not quite as good as this model, but it's close to it. So that's part of what we were able to achieve with RML. And that's what, if you aren't yet using predictive analytics in all areas of your business, I would recommend that you look or maybe investigate, like I heard this morning, looking at other things that you might want to predict, for instance, the likelihood that a legal action would be successful against a case. That is something that was new to me that I heard this morning at this conference. So the whole field will be able to take the data you have at the moment on clients and to use that to make predictions in other fields that you want to know about that client to increase your operational efficiency and ultimately your profitability. It's absolutely something you can do now. And I think for us, the RML case where there was such a significant improvement, so they will, the outcome is that they will have to spend only 1/6 of their operational cost to recover the same volume of debt. I mean, that's just such a huge benefit. And then maybe the leading message from this presentation could possibly be for each one of you to consider in what areas of your operation could you also apply those predictive analytics. And remember that you don't need to know everything about the client to make this work. If in the New Zealand context we only had 4 variables to work with, that is not very many variables. And also, in fact, we've also done some work with CNN.com, in fact, where we were able to make predictions from people just using the header attribute, which is what your computer sends another computer when you look up another web page. very, very scant attributes, but we still got a huge increase in predictability. In that case, 21%, predicting what people would actually, which ads they click on. So you don't need a lot of data. And I think that's the key thing, is that don't consider that you have to build up this huge quantity of data, which in some jurisdictions is just not going to be available before you can make this happen. I think from our experience, the most important thing is to have as clean data as possible. If the data is full of mistakes and errors, then obviously that makes the modelling, building your scoring models, all that more difficult. But I would encourage you to consider where those opportunities lie, and don't think you have to do a lot of things beforehand before you get a predictive model. Because even if you don't get a 6-fold increase from your model, even be able to split it in two, to have a 2-fold increase is still a huge operational saving. So my encouragement would be just to start, and to start and also in areas which maybe you have got models, but there are other areas which you haven't yet considered. Because it really is the only way to be a truly professional organisation in any sector, but certainly, as we've heard earlier today, in the collection sector, that is absolutely key. Some of these details are just the overview of the work we did with RML. They had 200,000 debtors that we worked with, approximately, and we just built the data set in very standard ways. One of the very interesting things about this work is that, as I said, one of the key things is that in good times, obviously you're going to get more repayments than in bad times. But if you have a good model, that rank ordering that your scoring provides you still holds good, irrespective of exactly the amounts you're going to get recovered. And one of the unique things about Vortex DNA is that it is an intention-based approach, where we bring that into the modelling. And one of the things we found is, particularly in the older debt collection examples, that our models actually hold up very, very well when you go out to beyond 18, 24 months, where most predictive models will tend to deteriorate. We found, yes, ours do deteriorate as well. We're not perfect, but they don't deteriorate as fast. And I think that's one of the key benefits of that intention-based approach that Vortex DNA brings to the predictive modelling process. So I hope that's been a useful and valuable overview of what predictive analysts can do. I think the main message really is that predictive analytics, if you're not already using it, please do consider starting. It is fundamental now to all sectors. You have to be able to use those resources you have, your staff, your operational budgets, in the most effective way. Predictive analytics is the answer to that quandary. So I'd like to thank you very much for your time and patience. And has the ball gone all the way around now of the room? Is everyone able to put their cards in?
We've got it over here, mate. We decided we'd think the rest of them was just get the other three in. That's called predictive analytics. The odds are 1 in 3.
I think that's called fixing the game, but anyway. I would like to thank you all very much for your time and patience, and I look forward to speaking to you during the course of this conference. Thank you.